On the last trading day, we detected two unusual trades on Trump Media and Technology stock ticker symbol DJT, and one of these unusual trades was worth more than $14 million. And what's also unusual about this is that these trades using options expire on November 15th after the US election. So do these wealthy investors think Trump Media stock will surge or crash after the 2024 election? In this video, we will analyze these unusual options to find out if the rich are bullish or bearish on Trump Media stock. Because as we all know, the rich have more resources to access more information to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into the data. As we can see here on the options time and sales tape, on the last trading day, October 10th, these put options were being traded and these call options as well. So we will analyze these call options first and save the bigger trade on these put options as our second analysis. Now for these call options, we can see there's multiple trades happening, so we need to add up these contracts. These are for the 25 strike calls and the 35 strike calls. And we have a 14,612 over here, plus 3,000, plus 2,491, plus 2,453. So we have a total of 22,556 contracts. And we can estimate the trade costs because we know the price that was being traded over here, where they were buying the 25 strike calls for $6.48. We need to multiply by 100 since each option represents 100 shares of stock. And they were selling the 35 strike calls for 410. So we subtract that out and we get $238 per trade. And since there was a total of 22,556 trades or contracts, we multiply that out and we get a total trade that costs $5.3 million. Now, we need to also make sure that these trades were opening trades and not closing trades, because if they were closing out of these trades, then we do not necessarily want to follow this trade. We only want to follow new opening trades. And so how do we do that? Well, we need to take a look at the historical data. On the day before these trades were being done, October 9th. So let's take a look for the October 9th trading day. For the November 15 options at the 25 strike calls, we can see the open interest was 1,606. And at the 35 strike calls, 1,251. So if they were opening the trades on October 10th, then today, October 11th, the open interest should have increased. So let's take a look now at the new data. We can see here for November 15th, at the 25 strike calls, the open interest has indeed increased to 52,514, and also at the 35 strike calls as well. So both of these options were in fact new opening trades. And based on our analysis, they were buying the 25 strike calls, which is why we also have the same position here. Green means buy, and selling the 35 strike calls. Red means sell. And as we had just calculated, they were buying and selling these call options with a trade that costs $238 each. And when we analyze this trade, we can see here on the risk profile that this trade being represented on this graph, on the x-axis, the share price of the stock, and the y-axis is the profit loss. Note the break-even line here. As the share price goes down, it becomes a negative loss. As it goes up, it becomes a more positive gain, because this is a long bullish trade, and we can confirm it on the Greeks here. We have a positive delta trade, and so this wealthy investor is going long bullish on Trump media stock. But keep in mind, because Trump media stock is associated with Donald Trump, one of the presidential candidates, and nobody really knows who will win the 2024 election, this is a very high risk trade. And so even though we are in this trade, we are using position sizing to manage our risk, because we put most of our capital in the lower risk, higher probability of profit trades that we share on our website. And so if you want access to those, we'll put a link at the top here where you can gain access to better trade ideas that is not very high risk in comparison to this one here. Because as long as we diversify with higher quality stock picks based on this type of data analysis, we can become more profitable in the long term. So make sure to go to our website if you want more stocks wealthy investors are trading for your portfolio diversification.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
Now let's take a look at the second trade here for these put options that was higher in trade cost for these 7 strike puts and the 12 strike puts. 28,866 contracts. Now again, we have to make sure that these are opening trades and not closing trades. And so if we take a look at the historical data again, for these November 15 options on October 9th, at the 12 strike puts and the 7 strike puts, we can see here the open interest was 1,541 and 538. And so if they were opening these trades, they should have added to the new data today. And we can see here at the 12 strike puts, we now have an open interest of 41,000 contracts, and at the 7 strike puts, we have 40,000 open interest. So they did indeed add to increase the open interest. So these are also new opening trades. And based on our analysis, they were selling the 12 strike puts to open and buying the 7 strike puts to open. And so when we analyze this trade, we can see here on the risk profile that this is selling a bull put spread, which means that it is going long bullish, but it is not very bullish, because you can see that the stock can drop all the way down to this break-even line by expiration, which is right about $10.94, and still be profitable because it is above the zero break-even line here. You can see the blue line is actually above it. And so this is a moderately bullish trade on Trump media stock. So keep that in mind. And because they sold a bull put spread, which is $5 wide here, 12 and 7, each of these trades cost $500 of buying power. And since there was a total of 28,866 contracts, we multiply that out, and the trade cost $14.4 million just to put on. This is the amount of buying power required to put on this trade. And so this is a moderately bullish trade, and we can confirm it also on the Greeks here. We see a positive delta trade. But keep in mind, the stock can still go down considerably and still be profitable. And so this is not a very bullish trade. They are taking advantage of the high volatility by selling these put spreads because there is a lot of volatility right before the US election. So keep that in mind if you are trading this, that the larger $14 million trade is not very bullish, that the stock can actually drop all the way down to that $10 share price and still be profitable. And so keep in mind, this is a higher risk trade because of the 2024 election coming up. If you are interested in the lower risk, higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here and let us know in the comments below, what do you think will happen to Trump media stock? Will it surge or will it crash in the US election? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.